The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you got the S&P's down 475. NASDAQ futures are flat. We have the DAX down $1.70 after reaching all-time highs. Gold is down $6.90, trading at $11.46. You get silver down 19 cents at $15.42. Platinum's off 13 at $1,094, under $1,100. Pretty wild. Copper down 5.5 pennies at $2.62 a pound. Light sweet crude breaking lows, down 81 cents at $45.32. And bonds, you get the 10-year up 11 ticks, 127.18. 30-year up 1 point and 7 ticks at 161.05. King dollar down 321 ticks, trading out at 99.73. The euro up 62 at 106, and the yen trading down 14 at 121.20. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the markets, folks, we are going to have some action here. You're going to have large swings. You're going to have high volatility. You're going to have all of the above. What is it all about? The key, I suspect, is going to be this. You get the Fed meeting tomorrow. 2 o'clock, you're going to have the announcement coming out. Now, are they going to do anything out there? I suspect no. But what they are going to do, and what the market's looking at, is that is Janet Yellen going to basically take out the word patient inside the statement? Because this is what you have. Picture, the rest of the world was still at very low interest rates. I mean, insanely low interest rates, okay? Bottom line is that our rates are high in comparison to where everything else is. But that being said, bottom line, the volatility that's coming in these markets is saying that when that statement comes out, that patient is going to be removed. If that patient's removed out of that statement tomorrow, the higher probability is going to go that rates are going to go from 0 to whether it's a quarter basis point or something, that the turn will be there and the Fed will raise rates in June. If that is the case, you can expect volatility beyond belief. And it won't be just in our markets, folks, okay? Because when the Fed moves, the Fed hasn't moved since 2006. We're 2015, okay? Bottom line is that I know a lot of folks are saying, okay, they'll go up, whether it's quarter point, 0.5%. It doesn't matter. The bottom line is that percentage-wise means it matters. You know, it's going to make a difference. And that's why you see gold getting hit out here this morning, where there's a disconnect, okay, which is pretty cool out here, is that you have the dollar down 311 ticks. Looks to me like the dollar already topped out. So there's a dynamic out here, a big shift dynamic, and we'll see how this is going to shake out. I expect what you're going to see out here today, you're going to have high volatility. If you're a trader out here today, you want to be all over it. Why? I suspect first you're going to get a down market. It's going to get fast selling. The market's going to snap all the way back, going to come all the way up. It's going to try to get into the, not necessarily the highs. Yeah, the S&P can get into the highs of yesterday in 2 seconds, okay? Bottom line, another failure at that point, and then you're going to start seeing positioning out here. The things that you want to watch real closely are going to be the bonds, and you're going to be the dollar, because that is what's going to move the market, okay? It's out here in spades too. There's no doubt about it. Let's go take a look at. Now, if we put up, watch this, because this is pretty interesting. So in the indices yesterday, this is what we had. The indices had light volume. The SPY, however, had some juice in it. So the SPY itself is saying that, hey, guess what? That high of yesterday can get tested. The high yesterday out there was 208.69. Right now, if we take a look at the SPY, and this is where it gets really cool. So right now, we're going to open up at 207.67. Yeah, so that's about almost a buck off the high. Intraday, once this baby opens up, we'll see how that test can come into play. But the SPY is the only ETF structure that had any juice behind it. That's how this baby was shaken out. If you take a look at the Qs didn't have it. The IWM, what was really it just missed testing its high, the IWM. It would have been really sweet if it could have tagged that baby. We missed it. The IWM closed yesterday at 123.33. It had got as high as 123.58, and it was 77. It was 77 that was trying to get into. Bottom line is that it looks like the IWM is not going to make it either. You know, we'll see whether they can juice that baby up to that. Well, that can juice it up to the level today. We're going to open. IWM is going to open about 122.96. And you're talking 123.75. So that's not the end of the world to try to get it up there. Now, let's go over and take a look at the gold market, because gold right now is trading down 970, okay, GCJ5. So let's put this on a 10-minute, since we have a live market happening. So we have you're into the lows that were generated back in November, because November, no, not there yet. November lows 1132, 1132.10 on this contract. And that's monster volume, by the way. What I expect you're going to see out here today, if you're a gold trader, you know, if you haven't traded the Nadex product yet, this is where you want to go trade it, folks, okay? Different defined risk, totally different. And what you could get your head wrapped around is this. You're 1143.60. You've done 55,000 contracts thus far. What you'd be looking for is, let me get this up. It looks to me like it's already going to fail right now, meaning fail on the way down. We had one jolt down. Let's see. Yeah, it did it. Okay, so check this out. Your jolt down is at 40. I got to open this just a little bit more. What is that? 43.80. 43.80. Yeah. So okay. So watch. They sold it down to 43.80. They got it down to 42.80. Right? At 42.80, all the orders are gone. That's the bottom line. All the orders are gone off the bottom. And that's not a lot of orders. You know why, folks? We've only done 56,000 contracts. That's not enough. It's not enough to blow out the bottoms. So, bottom line, what does that mean? Can't bust it down. Guess what? It's going to go up. And this is all you need in gold this morning. This is what it's going to be a trip watching this shakeout. Can it get above 1146.50? Because the 1146.50, that's where it's been consolidated from. Wanted to break that low, has done it, you know, and we'll see where the rest of that shakes out. So it's going to get intriguing here, particularly because when you're nailing something down, if there's no more orders down there, guess what? Whoever is nailing it down, what are they going to do? They're going to load it up, baby, because when you whack that bottom out, particularly a bottom like this, in a commodity, and there's not enough sell orders down there to bring it down $20, $30, forget it. That just means that, guess what? They'll reverse the position, they'll buy the position, they'll send it the other way. We go over to the dollar index. We take a look at the dollar index. This is a game beyond belief. I'm telling you, man, it's a trip. Dollar index. Okay, so dollar index right now, this contract, we're at 99.69. We put this on a 10-minute, and on the 10-minute here at the low of this morning, which is 99.62, that has juice. So that's saying, hey, guess what? That wants to get down there. Bonds are going to be the real trip out here this morning. Well, they're all shaking and baking. There's no doubt about it. And there's going to be a lot of things spinning at the exact same time out here. I mean, in a big number. There's no doubt about it, you know. So we're going to basically be able to, depending what vehicle that you're trading out here, there's going to be a lot of opportunities. The bond market may be one of the best opportunities, and that what I would be saying in the bond market is sell in, folks. Why? Because what you have is this. The 10-year out here this morning, it already has trying to do it, can't handle it. The 10-year is trying to get into the Thursday high. The Thursday high of the 10-year is 127.21. Let me take a look at this thing. Watch this. So the 10-year is 127.21. We hit 127.22. Volume is a monster up here, and every time it's going up here, it's less and less. So what we banged out today thus far is 355,000 contracts. It's going into 1.4 and 1.7. Not enough juice, man. Just not enough juice. The 30-year. What we have with the 30-year out here, and what you do have, we're gonna get our head wrapped around this. Okay, 30-year. 30-year, 61,000 contracts thus far. That is at 161.06. Now, that's over Thursday, and that is into a downdraft that came on the 26th. No, March 3rd. March 2nd, rather. That's 262,000 on the way down. The high of that is 162.05. The low is 159. I suspect what you're going to see is this. So the 30-year has gone to 161.21. We're at 161.06. You'll probably see the 30-year close under 160.26 today. That's the way that is basically setting up right now. And what is going to be wild is that we're all looking at the currency model, the bond model. It's the ETF model that is going to blow people's minds on the bond market. That's how this thing is shaking out, folks, okay? If we go over to the TLT, I was basically, now I'm short the TLT, okay? But I want you to get something straight here. The TLT, okay, is the 20-year bond plus fund. Now, ETF structures in themselves, the way it works is that they create shares and destroy shares. That's how it works, okay? There's never, there is an infinite amount of shares, okay? It just depends on how many buy and how many sell. What has happened is this. The most amount of money was taken out of the TLT since 2002, last week, okay? What that does is this. That does simultaneously. Now, this is what gets so crazy about the ETF structures. When we talk about an ETF structure, whether it's the NDX 100, whether it's the XLF, whether it's the XLE, you have a group of stocks, and what ends up happening with the group of stocks is that if you sell the stock, the ETF goes down. If you sell the ETF, the stock, they have to sell the stocks. So it's always the chicken or the egg. It's crazy. When they're going up, it's awesome, okay? Because when it's going up, if they buy any of the stocks in the ETF structure, ETF has pressure to go up. If they buy the ETF, ETF buys all the stocks. You can see what happens. When that reverses, and on the TLT, it has reversed, factually it has reversed, okay? That is a disaster, because what you have is this. There's only one TLT, there's only one product, and guess what? When they take the money out, what has to happen? Well, the TLT is a 20-plus bond fund. They have to sell 20-plus bonds. That's how it works. No thought process whatsoever. Money comes out, they got to sell. Money goes in, they got to buy. So this is going to be wild watching this whole thing shake out, you know. And we can go through. I'm going to start going through a couple other bond funds out there, large ones, large ETFs, to see what their net asset value is. And you know, you can get this information. I know you can get it every week. More than likely, I can find out where I can get it every day. But I know I can get it every week. This is Tom O'Brien. This is TFNN. You stay right there. And top of the bottoms here. Happy St. Patrick's Day. Look at that. And gold's down. Got a nerve. What the heck think's going on out here? We'll be right back, folks. You stay right there.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over $70 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. S&Ps right now are off 4. You get the NASDAQ futures up 1. Gold is down 10.50 at 11.42. You get silver off 23 cents. Bonds, 10-year is up 11 ticks. 30 is up 1.8 ticks. And King Dollar is down 3.16. Now, as you come over to our website at TFNN, don't forget, folks, every trading day we have live programming. You can get that right on your cell phone, TFNN.mobi. What you're going to see on the front page out here, in the carousel, you're going to see double your Tiger Dollar bonus with our spring special. The way that works is that we have Tiger Dollar. We do this a few times a year. This one is a special one, no doubt, because what you're going to do and what we have is this. If you have any products that you buy off TFNN right now, if you want any in the future, the way Tiger Dollars work, they're good on all products. No expiration date, totally transferable. The way it works is that if you buy $500, you get $600, so it's a 20% bonus. You buy $1,000, you get $1,300, a 30% bonus. And you buy $1,500, you get 21%, $2,100 rather, and that is a 40% bonus. That deal is good for this week only until Sunday night. Now, as you're over there, you just heard the promotion from our man, Mr. Dave White. This is option expiration week. You're going to have a highly volatile week. It's going to be, well, today's going to be a beautiful day, too. You know, we're just going to have a highly volatile week, which is really sweet, because this Fed is going to throw spikes into this thing in a huge way. I can just feel that, see, I think the patient number is going to come out. Whether they go up in June or not, that patient deal will come out, and that more than likely is just going to throw conniptions into the markets, period. Bottom line, Dave's doing a how to trade option expiration that is this Friday, okay, because that's option expiration. You can come to that. It's a subscriber event. You can test drive his newsletter for a month. That's free. If you like it, they'll charge you the next month. If not, you basically just cancel, and you're not charged anything. That event is coming tomorrow night. Wednesday night. So you'll have a nice shot at it. And bottom line, you can expect it's going to be a great event, because what you are looking for on option expiration, particularly when it's a few days away, you're looking for something that can move. What happens at that particular point is that they are most of the time all or nothing deals, okay? Meaning that when it's not like you're putting it up and, whether it's $1 or 50 cents or $1.50. Bottom line, you're looking for a double, triple, quadruple very quickly. And that's just the way it goes. It's what ends up happening is that the premiums are sucked out of these things, and what you can expect is that this volatility is going to be here. When Dave and I were doing the program on Friday, they nailed Tesla. I mean, he got Tesla. If you take a look at Tesla, this is pretty cool. So Tesla on Friday, Dave was looking at it, and they were into the 195 calls. And, Tesla was down there and closed at 180.88. Well, guess what? That's all. They needed the pop yesterday. They got the pop. Tesla went up $7. They were already out. Bottom line, they put up $2. They got back $3.80. Not bad. Some people might have got back more than that. They went out a lot more than that, but the least amount that they got was that type of number. The key there is defined risk. That's what it really comes down to, is defined risk. When you have the amount of volatility that we have out here, what I expect to see today, tomorrow is going to be insane. That is going to rock. And you know how these Fed meetings go. What happens to these Fed meetings? So tomorrow, coming into it, I expect, markets will flatten out. I think today's going to be the big volatile day. Tomorrow at the open, then it'll flatten out for a bit, then the volatility will start, and then Thursday and Friday, forget it. It's going to be like, well, you see, you can go both ways, too, because most of the time when you say volatility means that you do go downtown. Volatility in this case, like I think even today, I think what we're going to see today is that we're going to open downtown, market's going to try to rally back, fail again, run downtown, not heavily, but run downtown. And it's going to have to do with what everyone thinks that the Fed is going to do about this interest rate structure. That's what it really comes down to. The thing that's intriguing right now is that the dollar is kind of just hanging there, okay? Because realistically, if in fact the Fed's going to go up on rates, the dollar should be blown. Well, it doesn't have to blow out those highs, but because the dollar's been going up since 2011. We'll see how this whole thing shakes out. What I find really intriguing is this. You know how people always say that the market basically knows what's happening, meaning that the market is like 6 months ahead of itself. What is really cool is that my take on that is that the market is not 6 months ahead of itself. That is the bull that has been going on for years, because that is the easiest way. Like the market's up, everything's going to go good, so give me more money, give me more money. And the reason I'm saying that is that when the dollar is basically up like this, it's like people are almost scared to say, okay, no, things are great. The dollar's going to keep going higher. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 104. You get the Nasdaq off 12. S&Ps are off 4.5. We have gold down 10.40. Silver's off 22 cents. Some of the Dow stocks out here, we get a lot. They're not like they're down a lot, but they get a lot of red out here. You get American Express off 72 cents. Boeing's down 62. DuPont off $1.06. That's after coming down yesterday. That was a leader on the way down yesterday. America's down 52. You get 3M off 129. GE is down 13. United Technologies is down 87. Inside the NDX 100, what do we have happening there? Inside the NDX 100, the leaders out there, that NDX is down 10 points right now, but the leaders, American Airlines is up 267. That's going in the S&P 500. That's replacing Allergan. Facebook is up 65 cents. Wynn Resorts is up 94 cents, and you have Apple up 94 cents. Taking it downtown, you get Electronic Arts down $1.30. Micron Tech is off 67 cents. Comcast is down. Comcast A is down $1, and K is down 96 cents. Volatility, yeah, we're going to have it out here, and we do have it out here in spades. What is intriguing is this. So you have the physical gold's down, but guess what? They can't get the equities moving lower. So it's going to be really interesting watching this whole thing shake out. If we go over to Wrangle Resources first and you put GOLD up, what you're going to see is that Wrangle is down 28 cents. Bottom line, they couldn't even get it down to the lows that were established 2 days ago and 3 days ago, which is $66. We're at $68.47 right now. AEM, an Eco Eagle. What do you have with an Eco Eagle? I love when this divergence takes place. Yeah, Eco Eagle's going sideways, 40 cents. So what we're going to see out here, the volatility is going to continue out here. The 10-year has already given up. Bonds are going to give it up. This is going to be wild just watching this whole thing shake out. And the thing that's crazy here, folks, is this, is that if rates are going up, yesterday what you had is this. The divergence yesterday in the bond market was really weird. And what it was is that bonds were up and the market was up $200. It was like, okay, man, that whole deal has changed too. But that was divergence for that day. But when I saw that, I said, you know what? That's almost another indication that rates, they really are going to pull the trigger on this thing. And it's going to be wild if in fact, that's how this thing shakes out. It doesn't mean they have to go up continually, but pulling the trigger is going to be a heads up across the board for everything. You need a mortgage, folks, go get it right now. Bottom line, the 2 years still at 10 years still at 2.06. That means that your 30-year is going to be at about 3.85. And can that 3-year? Let me just pull something up here. Let's just see. I'm just curious. If I take this 10-year, and what I want to find out, this is what we want to know. Okay, no, I'll do the 30-year. So if I'll do the 30-year, where can these things go? That's what we want to find out. So if I put this on a monthly, the question would be, how far do you go down? Okay, so the 30-year continuous is at 146 still. There's going to be a lot of, this is going to go slow. So watch how this shakes out. When we bring this back, it's going to be hard to break under like 141. It's not the end of the world. $5. So what that would do, that would still keep mortgage rates low. I think what we're going to see here is that you're going to see that would be a mortgage rate of about 4.3. It's not the end of the world. I think what you're going to see here is the way this market is trading right now, they're going to remove the patient from it, from their statement. If they remove the patient from it, that's going to be enough to put volatility into the marketplace. Then the real key is going to be, will they have the guts to basically turn around and say, okay, we're just going to turn the screw once. It's hard. If you're a fundamentalist, it's hard to shake that out. There's no doubt, because every time that I look at the rest of the rates, it's like, there's no way you can do it. Then you can make the argument, which a couple, and the Tigers Den are doing, there's no doubt about it, so check this out. Housing starts slumped in February by the most in 4 years as bad weather, winter weather in parts of the U.S. prevented builders from projects. Work began on 897,000 homes at an annualized rate, down 17% from January, and the fewest in a year. What does happen is, no doubt, I like the idea that we're doing business in Florida in the real estate business versus doing business in the Northeast or the rest of the country, because we don't have to deal with that. There's no doubt about that. We deal with, about 10, 12 weeks of vicious hot weather in the summer. We got to make sure everyone has plenty of water. But other than that, it doesn't stop projects, not even close. Markets right now, let's see. Let's go over to gold, because the big gold deal out here, they slammed it down. They got it into the low. The low out there was 1141, and guess what? It's 1132. They can't get it into the 1132. You don't get it into 1132, and it's like, okay, you can't handle it. If gold closes over 1146.50 today, that's a failure at the lows with light volume. We've only done 65,000 contracts. It's not a big deal. We'll see what they shake out. It's breaking a low at 162,000 contracts. Last time we had any volume on the way down was actually 215,000 at 1162. If we go over to the GLD, we take a look at how the GLD is trading. GLD right now is at 109.87. The low out there is 109.67. We've hit 77, and let me see this thing. Yeah, it looks to me like bottom line is that that little baby right there is going to hold. So this is going to be You know, I suspect what you're going to see is that gold's going to crawl all the way back upstairs. That's the way this is shaking out right now. The dollar hasn't moved yet, but as I said a little bit earlier, when you basically take a commodity, especially in the futures market, you blow out the bottoms. Everyone knows where the bottoms are. You take those bottoms out, and there's no more sellers down below. The operator on the other side that's taking those bottoms out wants to buy, because it's one of the most easiest buys there are out there, folks, okay? What happens is this. You take it out. You push, you push, you push. They've already made money on the way down. Then they say, okay, hold it. There's no more sells, right? Bottom line is you go down there, there's no more sells. What do? You buy. You buy, you ramp it up. You know, so we'll see where this thing shakes out, but that's how this is shaking out to me right now. Because the gold, specifically gold, when you take gold down, you should be able to take gold down $40, $50, $60 when you're at lows like this, and they can't do it. So we'll see where the whole thing shakes out. Some of the high volume stocks out here this morning, you get MGM's up $1.73, you got Apple up $1.40. We have Coca-Cola up 34. Cisco's down 21. Comcast is off $1. Comcast is going to have some problems here. That's what it looks like. And that's going to be from the differential in streaming. Streaming, folks, is going much faster than most of these TV stations are realizing. That's what it comes down to. Bank of America, some of the Dow stocks. Let's take a look at some of those Dow stocks out here. You get Exxon's flat. You get Big Blue down 26 cents. 3M's getting hit. DuPont's getting hit. Let's just look at 3M for a second. No, that's not the end of the world. It's really, the DuPont deal is interesting because DuPont, this is volume off the high. They took DuPont south big time. You know, DuPont was up at the highs, light volume, blows off that high. So we were at $80 2 days ago. You're at 75 right now. That's a monster hit. And you came down with volume yesterday. Now what DuPont is making its way back inside 72, 75, 82. You get back inside 75, 82, guess what? You're going to be down at 67 ASAP. So that's going to be a big number to watch of how that little baby is getting handled. If we go over to Apple, we take a look at Apple for a second. Apple doesn't have any juice. Apple's setting up an ABC structure on the way down. Your A point on Apple is 133. Your B is 121. Apple's coming into a downdraft today of 89 million shares, and you're at 6 million. It's a nice setup, actually. Pretty wild. It's pretty wild, folks, no doubt. So you get the 10-year up 8 ticks, 30-year is up 31 ticks. Just since we've been on this morning, okay, just when we were talking about right from the get-go, this 30-year, it's giving it up. And this is going to be, you're going to get harmony with this baby. And what the harmony is in the bond market is this. The harmony is going to be the last Thursday, 160.26. That is going to close underneath that. We're already at 160.31. That's after being up 161.21. You're going to have lighter volume. The 10-year has already done this. And what you have is that you talk about energy. That's going to be the third time that you've gone up and tested that level. Can't handle that level. If you're taking a look at the 10-minute that I have inside there right now, you're going to see that at 0930, that sell was already generated in there, and whoever is selling these bonds, they're going to sell it again. You can see it right now. They're going to throw everything they can at this bond market, push that baby lower, and there you go. Dow's down $1.31, Nasdaq's off 9. Gold's coming back. That's only down 670. Oh, you have to love this market. Oh my God. Okay, so dollar index is down 236. Now the dollar hasn't moved yet. Okay. This dollar is going to move, folks. Well, what happened is this. They're going to go from whacking this bond market to go over and whack that dollar, okay? What ends up happening is that this roll starts, and when this roll starts, you just start hitting those buttons because the bottom line is that you know that a bond roll is going to basically push all currencies in a big way. I know. Wild bears on the loose, man. There's no doubt. You know, what you're hearing, folks, I love volatility. Volatility is where it's at, man. And large changes in trends is where it's at, because what ends up happening is this, is that when you have a large trend in the marketplace, and instead of just looking at it, right, you want to work on it. And when you're working on it, you can see it unfold. It unfolds like an onion. That's what it does. One piece comes off, then the next piece comes off, and it just starts unfolding. As it starts unfolding, it hits things very quickly. And it'll hit them both ways. It'll hit them both ways. But the bottom line is that you have the volatility out there. Check this out. Okay, here we go. Gold is up 320 right now, folks. Bang. Okay. Now that right there. Okay. Unfortunately, what you did hear off me. Yes, we were testing lows and all that, but that had to do more so with what I was talking about earlier. That the aspect when you're pushing and there's no more sellers, you're going to flip it. I've done it, okay? You just know that that's it. Okay, good, we're done. All set, bang. Okay, now let's hit the other side. We're going to hit it. We're going to run it all the way up. That's what you're going to have here. This is going to be a run, and it's going to be a big run. The gold stocks, they're already happening, so it's going to be all over the place. Now, the key is, again, what is the key? The key is what the heck's going to happen with these interest rates? Because every single time, the dynamic here is this. The dynamic still is, are they going to go up? Are they not going to go up? And if they do go up, what the heck is the gold doing going up? But it looks to me that, number one, the patient's going to come out. They are going to go up. Gold's still going to go up. The dollar wants to go down. I still can't figure that out. Meaning my head. Okay? It'll get figured out. Okay? It just has to keep spinning around and around and around. And we'll figure out, okay, what is that dynamic? That dynamic very well could be that it's just everyone else across the world, their currencies are getting croaked and they're coming into the gold market. It doesn't take a lot to come into the gold market, folks, to have gold go up. That's the side of it. Let's go over and take a look at that GCJ and see what we got here. Someone had to come in heavy on this one. Oh, my God. Look at this. Look at the spike. That's a spike, man. Someone came in, and they just came in with everything. They came in with 13,000 contracts, right? That's what they did. And now what you're going to see is that gold's going to make its way up to 1162. Never mind. So 41 to 62. 62 is game out here now. Whole different ball game. That's how this whole thing is shaking out. Dow right now is down now 129. You get the NASDAQ off 10. S&Ps are off 5. Bonds, you get the 10-year up 8. We got the 30-year up 1 full point. And SPY. Let's go take a look at the SPY, because the SPY was the only indice yesterday that had some juice underneath it. Right now, the SPY's back 11 with 11 million shares. We're at 97. Yeah, SPY wants a lower price. It doesn't even look like it's going to try. It's not going to test. The first leg, yeah, it doesn't look like it's going to test. Oh, I see what it wants to do. Oh, it's going to go to 206.13. 206.13 is game out here. This is going to be wild, shaking this out. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow's down $1.47. NASDAQ's off 14. S&Ps are down 7. You got gold off $1.50. Silver's down 7 cents. Bonds, 10 years are down 9. 30 years off $1. We're going to be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks, and I'll tell you, mess with gold on St. Patrick's Day, folks, and the leprechauns are going to come after you, and that's the bottom line. That's what ended up happening out here today. You had a gold, the low is 1141. Right now, you're 1157, and what's amazing is that I know there's tigers and tigresses that have been out there in this market for a long time, and if you remember, and I remember this because I was going into my attorney's office on State Street. I was taking a plane out of here. I was going up to Boston on a St. Patrick's Day, and this is probably going back, I got to look at it after I get off the air, but I think it's 10, 11 years ago, and the exact same thing happened, but gold exploded that day, topside. The pot of gold, the little leprechauns. Let's go to another leprechaun out in Erie, Pennsylvania. Marie, what's going on?
Happy St. Pat's Day.
Thank you. How you doing?
Oh, we're doing fine. The snow is melting. Yay.
Oh, thank God. I know.
Oh, gosh.
What a winter, right?
Oh, gosh, it's one for the record.
It is one for the record. I know. They finally got a record in Boston, 108 inches. They got another 6 inches the other night, two nights ago. So.
Can I tell you, it's very unusual for Boston to beat us, and they're just a little ahead of us. No.
Unbelievable. Unbelievable. Well, thank God for the spring. This weekend, right?
Yay.
Yeah. Totally. So you want to look at the TLT?
Right. You had talked a few days ago that it might retrace as high as 130. Have you changed your mind on that?
Yeah, I did. Yeah. I think I sold it yesterday.
Yeah, I've been kind of dribbling it out, and I was
Yeah.
just debating how much longer to wait. And it's coming up on such light volume that I thought, well...
Well, what you could do, just put this. You can put the stop under today. Do you know what I mean? The risk is going to be going into 2 o'clock tomorrow afternoon. Do you know what I mean?
Right.
Because there'll be a fast move. Well, but you know, bottom line, it could be a fast move up too. You know,
Right.
if they don't take out that patient, you know, that language, that would be a fast move up, because that would be saying they're not going to go up on rates. Period.
Right. Now, I've heard that because of our bad weather and things are slow, that how can they possibly consider raising rates? Are you of that?
No, I'm having a hard time fundamentally wrapping my head around it, but technically it looks like they're going to. Yeah.
Yeah.
Have a great one. Have a safe
Okay,
one.
thanks.
Stay right there, folks. Dow down 157, NASDAQ off 9, S&P's off 6.